Good, everybody. Still here. Daily Market Pulse. It's Thursday, September 18th. And the Dow, the NASDAQ, I believe it was those two, they hit all-time highs today. So, but on lower volume, nonetheless, doesn't really matter. It all looks good, all looks strong. We like it. We want to go with it. So TSX still remains, unfortunately, below the 8 moving average, but there's the Bollinger Band starting to flatten out on the Dow. Uh, Nice move yesterday. If you recall, back into the resistance area. We're still right there. A little, upper shadow tried to break out, could not. Bollinger Band part of that resistance as well. Just look for this to keep going. Got room still near 17.5 on the upside if they can manage to get through their support. Will be right here, but also back down a little bit near 17,000. Not looking that way right now. The S&P is certainly strong. You see the new high right there. High close as well. Bollinger Bands are starting to open. There's room clearly to upper levels, 20, 50, etc. The weekly chart actually demonstrates a better channel. So there's room right now today into about 2080, 2075. But for the week, actually, I'm sorry, for the week into 2075, near 2100. So there's plenty of room still to the upside if they so choose to take it there. Right now, the polarity will be right beneath us. 2000 for sure will be a polarity and support area, you'd think. So keep in mind in that. Same thing with the Nasdaq, as mentioned, a new high here. It surpassed the high from just a few days back. Actually, so this is not a new high. Is this the right date? So it was the Dow and the S&P that make a new high. It's not the Nasdaq. So Nasdaq still looks fine. Room still higher as well. Everything looks good. Support across 45.50. Currently looking to break 4600 and go higher. TSX, as I just mentioned just a minute ago, still remains beneath the 8 moving average. The gold, silver, oil, and so on are the primary factor and reason why. It's holding at support, 50-day moving average. Look for an aggressive push higher, I believe. On the TSX, there's the New York Stock Exchange. I thought I'd put it in. It's below the resistance area still. It's lagging, but nonetheless still looks fine. US dollar, Canadian dollar. Is loading. There it is. It pulled back off the 111 area into a support area. It was trying to hold 110. Could not quite do it. Looking for the 200-day moving average and the 50-day moving average below. Look for support there and at least some kind of a bounce back toward 110. Then we have the euro looking like it's trying to make a reversal here with a bullish piercing at 129 and a possible kind of a crack and snap effect as well. Lower lows in the last 2 weeks, but not lower lows in the stochastic. So look for an aggressive move into 130 or higher, possibly 131. December contract of the Treasury is still fading, still looking for at this point. If we drop below 136, we said we go to 135, possibly 134, 133, but 135 for sure. On its way now to 135, very closely on its way there as well. December contract for Japanese yen flushed lower even more aggressively. Thought there might be a little bit of a bounce, but there was plenty of room to the downside still. So there they go. Ugly, ugly, ugly downside move. There it goes. At some point that's going to bounce, but hey, for right now it's not. Gold and silver both look a little bit like this, where they're trying to break back over, in this case, 1240 on the gold. Some kind of a move. That was yesterday, then this is today. A little bit lower on a gap lower, so another flush low, even though it's a green real body where the buyers are trying to step in, they're not able to create or close green. They're still closing very much red. But divergence here, lower lows, but not lower lows in the stochastics, telling us maybe the bulls are stepping in. There may be a very aggressive move to the upside back toward 1280. Same thing here with as silver. There's actually a gap lower as well, just like we saw in gold. In today's candle, it's not showing up right now. And again, looking like it needs to, based on the divergence, looking like it wants to come back through 1875, back toward 1950. We'll see if that will be the case. Crude was holding support. It held a bull sash on a previous low and lower shadow, climbed aggressively near top of a channel at 95 and retraced for the last 2 days back to retest the lows here at 92, as well as the lower shadows from last week, or actually this week and last week, both. So looking for support here near 91 max and then a bounce. The sector for oil, industry, and exploration, drilling, etc., etc. Very similar look. Nice bounce off $90. A move into 93 with a retracement back into 91, looking to hold these levels here. Kind of a crack and snap effect here, right? Essentially, you got that support that was broken and then immediately reversed, now retesting 91. That's what we're looking at there. So if we move over to small caps, IWM, representative and proxy for the Russell 2000, still within the channel, still below 116, still needs to break 116 to get a shot at 117, 118, maybe even 120, 121. Support across 114 remains. And with that, the VIX not showing any sign of fear, came off 1450. Volatile day yesterday with the Fed meetings, and then we have a move pushed back down into 12, 1150 support, maybe even to 1050 if the markets get very bullish. But right now, this is where the VIX is hovering with very little fear at all.